Hello, everyone, and welcome to today's webinar of Digest of latest Judgment in GST. We are really glad to have CA Bimal Jain, sir. He needs no introduction in the world of GST, but yet we are going to give him a small introduction. So he's been a chartered accountant since 1994 and brings over around 30 plus years of experience in tax, finance, and compliance. Along with a CA qualification, he holds a law degree and is a certified finance consultant. He has worked with leading companies like LG, Honda, Hindustan Development Corporation, and currently serves as an executive director at A2C Tax Corp LLP. CA Bimal Jain sir has been a keynote speaker at numerous prestigious events, including a Guinness World Record setting GST session with over 4,500 participants, and has been recognized by ICAI, ICSI, and many others for his contributions. We're truly honored to have him here today. So please join me in welcoming CA Bimal Jain sir. So before I hand it over to him, just a few quick housekeeping notes. If you have any questions, please do use the Q&A tab. Bimal sir will take them up towards the end of the session. A quick poll will be running during the session. Your response will help us improve future webinars. And yes, the session's been recorded and will be available on YouTube after. So over to you, Bimal sir. Please work your magic.
At the outset, let me thank Zoho Books and lovely introduction by Gina. Thanking all the participants who are taking out time and joining today on very important topic on latest legal jurisprudence in GST. Zoho Books takes this initiative for month-on-month basis for all burning topic in GST. We are walking whatever the things are happening in GST, we are trying to make it simplified in terms of good and simple tax. And today also we are going to discuss number of good judgment wherein Honorable Supreme Court deciding in favor of the taxpayers. So before starting, let me check from each of the participants. Can you hear me properly? My voice is audible. You can see me also on your desktop, laptop, mobile, wherever you're watching this webinar. If you can say yes in question answers tab, it will help me to understand and get it started ASAP. Okay, so all right, lot of yes has come. Thank you very much. So this is how I was expecting. Thank you very much. So without taking further time, let me start with where we are and how we are heading for. What are the things we need to discuss under GST litigation and why such litigation in GST when we all talk about GST going to be good and simple tax. Let me start. GST is a self-assessment tax. As per section 59, what is being said that every registered person self-assess their tax liability and they must pay the taxes by filing return under section 39, which is GSTR 3B. So GST broadly is self-assessed tax. As a taxpayer, you are assessing yourself, you are determining your liability, taking corresponding credit as required, and filing your return under section 39, which is GSTR 3B. But we all know that we file GSTR 1 outward supply statement. Then we are filing GSTR 3B, which is consolidated return, which includes our outward tax liability and corresponding ITC input tax credit for the relevant tax period. But before filing 3B, we are matching ITC with GSTR 2A or 2B. And then after the year closure, we are filing annual return, GSTR 9 and 9C as applicable. So these are the return we are filing in the GST regime. Now, thereafter, what happened? Department scrutinized our GST return and they issue notices under section 61, ASMT 10, which we reply in ASMT 11, and then department, either they can drop the proceedings or they can initiate for further proceedings for the audit purpose under section 65. So this is called scrutiny of return. Alongside, they are also having base judgment assessment, which is assessment of non-filer of return under section 62. Assessment of those who are not registered in GST under section 63, and summary assessment. So these are the assessment aspect when we look at GST scenario. After that, there's the audit done by the department under section 65. And then there's a spatial audit by a practicing chartered accountant or cost accountant under section 66 on 2 count when ITC and valuation is in dispute. So this is what coming out from under section 66. Then start enforcement, anti-evasion measure. Under section 67, inspection, search, and seizure through summoning the taxpayer, any person under section 70, and then it comes adjudication proceedings. Here I would like to draw your attention, and I would be looking for the answer from each one of you. We have seen 2 important sections under adjudication. Under section 73, which is non-fraud case, and under section 74, which is fraud case, fraud, willful misstatement, or suppression of facts. So the time period prescribed for passing the order under section 73, which is non-fraud case, it's 3 years from the due date of furnishing annual return. And for the fraud case under section 74, it is 5 years from the due date of furnishing annual return. Let me ask one question to all of you. This is the date they find passing the order. What is the date by which department must issue show cause notice when you talk about section 73 non-fraud case or section 74 fraud case? You can get the answer in question answers tab, and you can also cross-check whether answer given by you is correct or not, so that you can also evaluate your GST knowledge and the litigation proceedings. Under section 73, I clearly say 3 years for passing the order from due date of furnishing annual return, but show cause notice must be issued at least 3 months before. At least 3 months before from the due date of this passing the order. And when I'm talking about section 74 fraud case, it must be issued, show cause notice must be issued at least 6 months before due date for passing the order. So this is the important one. But what is now relevant here, that section 73 and 74 is having sunset clause. It is applicable only up to financial year 23-24. So relevance of 73 and 74 is applicable only up to financial year 23-24. We started from 17-18. Relevance of both these sections is going to be diluted beyond 23-24. So from financial year 24-25, a new section which you must take a note of it. Section 74 capital A got introduced. 74 capital A. And section 74 capital A is having no bifurcation. It is applicable for both non-fraud case and fraud case. So time limit as prescribed for issuance of show cause notice or order from financial year 24-25 is now applicable common timeline even for the non-fraud and fraud case. So what is the new timeline which you must take a note of it? First of all, show cause notice must be issued within 42 months. 42 months from the due date of furnishing annual return. Show cause notice. And when order to be passed within 12 months plus 6 months it can be extended by the commissioner or any proper officer not below the rank of joint commissioner. So 42 months for so-called notice, 12 plus 6 months from the date of issuance of so-called notice order to be passed, whether it is non-fraud case or fraud case. So relevance of 73, 74 is being done away with. 74 capital A now going to be applicable. Now, you would be thinking that under section 73, there was provision that no penalty. If I pay the tax and interest, then no penalty. And maximum penalty limit was 10% of tax amount. And in fraud case, 74, there was threshold 15% of tax amount, 25% of tax amount, 50% of tax amount. What would be that provision? Listen very carefully. Under section 74, capital A, if your case is non-fraud case, and what could be non-fraud? There is no malified intention. There is no fraud. There is no willful misstatement. There is no suppression of fact. These are called non-fraud cases. And penalty would be maximum of 20,000 rupees or 10% of tax amount, whichever is higher. So when penalty is not leviable in case of non-fraud case, if you pay the tax and interest before issuance of so-called notice, even if so-called notice is issued, but you pay tax and interest within 60 days, which was earlier 30 days, then there will not be any penalty. And after the 60 days gets expired, then the penalty would be higher of 20,000 or 10% of tax amount in non-fraud case. What about fraud case? In fraud case, we know maximum penalty is 100% of tax amount, but it can be reduced to 15% of tax amount, provided you pay tax and interest before issuance of so-called notice. It can be reduced to 25% if you pay the tax and interest within 60 days of so-called notice. It can reduce to 50%, 50, if you pay tax and interest, of course, along with penalty, 50%, within 60 days of order in original. And thereafter, the penalty would be 100% of tax amount. So these are the background of adjudication proceedings. There are two important explanations, which is given under section 74, capital A. It was there even before under section 73 and 74. I would like to highlight those two important explanations. The first one, and you should answer in question answers tab also. Then we will start with the litigation. Important point, which is subject matter of today's webinar. The first point. Let's say department has initiated proceedings against you under section 74. Let's assume. Can department start separate proceedings of prosecution under section 132? 132 subject to arrest provision, read with section 69. My question simply goes to all of you. Answer in question answers tab. Department has initiated proceedings under section 74. Can department separately initiate proceedings under section 132? Say yes or no in question answers tab. I'm waiting for a few seconds to get your answer so that I can understand what is your answer, and you must give a try. If you read the explanation, which is now relevant, 74 capital A, applicable from financial year 24-25, These are separate proceedings and both can be separately started. So I'm just giving alarm to all of you that prosecution proceedings are in separate. So department can start separately. Second, what is the meaning of separation of facts, which is termed as fraud case? I'm putting one point to you and you answer. Let's say I need to fill up some detail of outward supply in my return or outward statement, which is GSTR1. But somehow I failed for either or region. Can it be termed as separation? Can it be termed as separation? Please tell me yes or no. That is the only answer. Or you can say department has asked some information from you. You did not submit. Can it be termed as separation? And thereby the higher penalty amount, 100% of tax amount can be levied. You say yes or no. I'm just asking this question to all of you. And to give you alarm, they have said separation means if you fail to submit the details and information in your return or statement, even you fail to submit the details asked by the department, can be termed as separation. So you need to be careful about. But another one, which is explanation 1 Roman 2, importantly saying if proceedings against main noticee, concluded, then the proceedings against co-noticee under section 122 and 125 shall be deemed concluded. So this is what the brief background of adjudication and the litigation way forward. Now I'm picking up important judgment, which is the subject matter for today's discussion. Before I start, let me check once again. Are you all ready? If you're ready, your thumbs up, because I've given you theoretical background. Now we are going to discuss the practical background. You can say thumbs up, say yes, and we can start with. Thank you very much. So a lot of thumbs up has come, a lot of yes has come in question answers tab, and we are going to enjoy today. Let's start with the very first topic. I'm your supplier. I'm your supplier and you all are my buyer or recipient. While filing GSTR1, I have made mistake. Instead of putting your GST number, I have inserted GST number of some other party. Quite obvious. If I'm putting GST number of some other party, it is not going to be auto-populated in your GSTR 2A or 2B. And department, quite obvious, would be denying the credit at your end, right? Let me ask some more questions related to this topic. If there is a B2B supply, registered supplier to registered recipient, if I wrongly furnished as a B2C, please tell me, is it going to be auto-populated in your 2A or 2B? Say yes or no. It is not. It will not be auto-populated. Again, the credit is the subjective term for the recipient. What happened? Third scenario. I'm doing interstate supply from Delhi to Tamil Nadu. Interstate invoice, IGST charge, discharging IGST liability also through 3B, but while filing one wrongly furnished as an intrastate. I did not mention place of supply at Chennai, Tamil Nadu. Is it going to be auto-populated in 2A or 2B? Please reply. It will be there, but ineligible. There's no fault of yours. Being recipient, no fault of yours. So when I have wrongly furnished GST number, it is not getting auto-populated in 2A, 2B of the recipient. There's no fault of yours. Whether your credit can be denied. This is my big question. Of course, we are having answer, but these are the cases going before Supreme Court. And this is what I'm going to discuss today. Let's say financial year 2019 to 1920, transaction of 1920. I made the mistake. I did not submit your GST in correct details in my GSTR1. Hence, it is not getting auto-populated in 2A, 2B of yours. While doing the scrutiny of return, department issuing notice or so-called notice under section 73 or 74, in some of the state, they are issuing notice of 74. How come this subject matter is of 74 with the fraud? But they are issuing 74 so-called notices. And they are saying you can't claim credit. They are issuing notices in 23-24 for transaction of 1920. And now being recipient, you come to know that this was not auto-populated in your GSTR 2A for the period 1920 for the fault of Bimal Jain, supplier. Department saying your credit going to be denied. Your credit going to be denied. And even they are passing the order against us. Though we are having circular number 183 followed by circular number 193, but this matter has got divergent judgment from different high court. Now the question is, when credit is not getting auto-populated in your 2A or 2B, you will definitely come back to me and you will say to the supplier, kindly get your GSTR1 amended or rectified. The question is, in 23-24, you're coming back to me and asking me to correct my GSTR1 of 1920. Can I do that? Whether this is permissible on GSTN portal, please say yes or no. Can I do that? Answer is big no. Big no. Because there are time periods specified for any kind of amendment or rectification of GSTR1 was 30th September of next financial year, related to any relevant financial year. And this 30th September got amended to 30th November with effect from 1st November 2022. Now, this is the maximum time period prescribed that I can amend my GSTR1 by 30th November of succeeding financial year. That time period is gone. Now, I can't amend. Even if I raise the ticket, have you raised the ticket in GST? I'm just asking. We are raising ticket in GST, but within 24 hours, ticket is getting solved, but nothing is getting solved. Have you ever tried calling someone at help desk, GST help desk? It does not look like that we should help them out. Sometimes they're asking from the help desk, why can't you speak to your chartered accountant? But how can we say that we are calling from chartered accountant office only? So a lot of factors. We are not getting each a business which we all are trying. We are not getting. And department is saying you will not be given credit just because it is not getting auto-populated in GSTR 2A. Now, when this matter has gone before Telangana High Court, in the case of Yokohama India Private Limited, when this matter has gone to Punjab and Haryana High Court, Barcode India Limited, this matter was argued. And what department has said to the Honorable Bench, Lordship, there is time period prescribed. Why didn't this supplier amend his GSTR1 by the due date? It can't be allowed beyond that specified due date, Lordship. And Lordship, whatever GST collection we have made, we have shared among central and state. Now, if you allow this GSTR1 getting amended after the specified date, then the problem. Revenue is already being shared between central and state. Critical. And date is prescribed. That is how the contrary judgment, and both Telangana High Court and Punjab and Haryana High Court has given judgment that beyond specified due date, we can't amend. We can't amend GSTR1. So what happened? Problem at your end, at your recipient end. But fortunate part, Karnataka High Court in the case of Wipro India Limited, and very recently Bombay High Court judgment which has gone to Supreme Court, Abradare Technologies India Private Limited. Petitioner has argued, what he has argued, listen carefully, because Department Revenue has filed SLP against Bombay High Court judgment which was in favor of a taxpayer. What was argued before Bombay High Court? Petitioner argued, Lordship, there was clerical mistake, arithmetical mistake, unintended. There was no intentional error while filing GSTR1. We have paid the taxes to the government exchequer. So there's no loss of revenue. But if you don't allow credit to the buyer, to the recipient, it will amount as a double taxation. Do you all agree? Supplier has paid the taxes. If you don't allow credit to the recipient, then it is double payment. Do you all agree? If you agree, say yes in a question answers tab, or maybe thumbs up so that we can sing together. It would be double payment. Double payment. Am I right? Double payment. Second, Lordship, why this mistake happened and why we could not correct by the specified due date. And petitioner has argued, Lordship, we could have corrected within time had GST law introduced in a manner as it was enacted. You must be recalling section 37, 38, 39, 42, 43, 43A. What was that system all about? Supplier going to file 1. It is going to be auto-populated for you, for recipient in 2A. And then you will file GSTR2 credit statement. And you have a facility of add, modify, delete, right? So if Bimal Jain being supplier has made mistake furnishing GST details, which is visible to you, quite obvious, you will correct it while filing GSTR2. And once you file GSTR2 by 15th of next month and correcting it, it will be auto-populated for supplier in GSTR1A. So supplier can see that my buyer has made the correction. And quite obvious, I will agree for that. And then we will file GSTR3. So this mechanism was auto matching and ITC reconciliation. Lordship, department did not introduce GSTR 2 and 3. Had it been introduced, we could have come to know that there was some mistake on the part of supplier, could have been corrected even before specified date, since it was never implemented. Automated ITC matching and mismatching, it can't be penalized on the taxpayer. It was all fault of the department. They never introduced, and GSTR 2 and 3 never, and got omitted from 1st October 2022. Then how this can be put as an obligation on the taxpayer? It is double taxation, unintended error, clerical one, with no IT automatic matching provision applicable on GST and portal. If credit is being denied to the recipient, then it is hurting right to do business. Article 19(1)(g), right to do business. Double payment, double taxation on same single transaction. On a lighter note, even court asked the revenue department, always see the mistake on the part of taxpayer. They're clerical error. You don't do any clerical error. As a revenue department, you do a lot of clerical error. Can it be penalized? Can you levy double penalty? Can you make it double taxation applicable? It is really hurting right to do business. Portal is here to each business, not to on each business. You need to create the infrastructure which is helping to the taxpayer in terms of GST law got implemented. And Bombay High Court has held that GSTR1 can be amended even beyond specified date. Knowing the facts, there was contrary judgment from Punjab and Haryana High Court, Barcode India, Telangana High Court, Yokohama India Limited. Still, Bombay High Court has given favorable judgment along with Karnataka High Court judgment, Wipro India Limited. But revenue is not stopping here. Revenue is filing SLP in the Supreme Court. Fortunate part that SLP got dismissed by the Honorable Supreme Court. So the legal position as on date is for the past period. When GSTR 1 can be amended beyond specified time period. This is my first litigated point, and a lot of so-called notices. And you must be recalling that 2A, GSTR 2A is only facilitation. It's not a condition to avail credit. GSTR 2B is important. Of course, from 1st January 2022, you must be careful about. And you must make a note of it. GSTR 2B is important. Then you must cross-check your input tax credit. This was my first point of litigation. Am I clear to all? If I'm clear to all, can I see thumbs up from all of you? Thumbs up or yes in a question answer tab? Okay, this is the first one. Coming to the second point. We all know that we need to avail credit in GSTR 3B. We all know about it. But let's say by mistake, you're a recipient, while you are filing your 3B, you missed showing some credit amount in your 3B, GSTR 3B. You missed. It was unintended, clerical error, arithmetical error. You missed showing the credit in your 3B, but while finalizing your 9 and 9C for that relevant financial year, you saw this credit was available and you're satisfying all conditions of section 16, subsection 2, but you missed availing credit in your 3B. Now you have availed that credit in your GSTR 9 and 9C. My simple question goes to all of you. You have shown this credit in your 9 and 9C. You're satisfying all the conditions under section 16, subsection 2 to avail the credit, but you missed showing the credit in 3B. Is it permissible? Can you avail the credit which was not shown in GSTR 3B? I need answer yes or no. You can answer in a question answer tab. Whether that is possible, permissible, I'm just waiting for the answer. So you can write down whatever coming to your mind, and I will definitely try to answer it. Let me tell you. Department is saying you can't. Even their instruction of 9 and 9C is saying you can't avail credit with 9 and 9C. But tell me, what could be the scenario? And I'm telling you, 2 High Court judgment. One from Madras High Court, Kevin HP Gas, Sanmoga Hardware Electricals, and one from Calcutta High Court, Pioneer Cooperative Car Parking Services. What is the important petitioner has argued and for which Honorable Court has given favorable judgment? Listen very carefully. The first one. The argument given by petitioner, Lordship, yes, we have made the mistake while filing 3B. It was unintended error. But Lordship, what we should do, we can't rectify GSTR 3B. There's no provision in GST law. We can revisit our GSTR 3B already filed. So not permissible, Lordship, first. Second. Lordship, who has said that GSTR 3B is the only document, only return through which credit to be availed? And what is the argument picked up by the petitioner? Petitioner has said, Lordship, there was GSTR 2 until 1st October 2022, till 30th September 2022. GSTR 2 credit document, credit statement, which they never implemented. It was alive. They have not notified. It was alive. So until 30th September 2022, there was GSTR 2 and GSTR 3B. Then why department will always say that credit to be availed through GSTR 3B when it was coexisting with GSTR 2? They have omitted only from 1st October 2022. So meaning thereby, prior to 1st October 2022, there were two documents for the credit, GSTR 2 and 3B. So they can't say 3B was the only document. Even GSTR 2 was coexisting, which they have never implemented. Argument number 2. Argument number 3. Lordship, I'm doing my transaction, self-assessment tax. Of course, I should have taken credit through 3B, but I missed it. If I missed it, what I will do? The last document is annual return. And that is the audited. Earlier, it was audited by chartered accountant or cost accountant, and now it is self-certified reconciliation statement, GSTR 9C. What we do, we summarize all the information. Outward supply, input tax credit in 9 and 9C. When I came to know that there was some credit which was available to me, and all the conditions are satisfied, I have shown the credit in my 9 and 9C. That was the last opportunity for me. So if you don't allow me the credit, then what is the relevance of this annual return? What is the relevance of annual return? Section 44 read with Rule 80. Relevance of annual return is it comprises of whole year transaction related to that relevant tax period, which I'm referring to. And we are showing all the transaction in that annual return and self-certified reconciliation statement. Lordship, I've done my part. Why my credit would be denied? And definitely, if credit is being denied, for which taxes are being paid, no loss to the government exchequer, which will amount as a double payment, should not be. And I'm giving the judgment, Madras High Court, Kevin HP Gas, Sanmuga Hardware Electricals, even your Calcutta High Court judgment, Pioneer Cooperative Car Parking Services, they have said annual return is the last document, last opportunity for the taxpayer to include everything, whatever. Like when I'm forgetting some outward supply, I'm disclosing the transaction in 9 and 9C and paying the taxes. Similarly, ITC should be made available and accepted by the High Court. I hope all of you will agree that 9 and 9C should be the last opportunity. Do you all agree? If agree, can I see your thumbs up that yes, you're agreeable to me? One thumbs up will help me that yes, you all are aligned with me. Or you can write in your question answers tab. Yes, possible. Perfect. So a lot of thumbs up has come. Thank you very much. Coming to the third litigation. And very interesting, I will connect with the cross charge. What is cross charge today? I'm a company registered in Delhi, but I'm having 4 registration in 4 different states. I'm taking separate registration. We become distinct person. Am I right? Distinct person. Now, when we are distinct person in GST, there's a concept called deemed supply. So corporate office giving services to other distinct person called deemed supply. And we are debating from day one. How can my left hand is providing service to right hand? Is it a service? It is both my hand. So I'm a company registered in Delhi having 4 registration. How come my corporate office is giving services to the branch or vice versa? We are all discussing and debating, right? Cross charge and then corresponding valuation also. So just pause for a while. I will connect you with one judgment of Kerala High Court. Interesting one. In the case of Indian Medical Association. What was the judgment? Listen very carefully. When club, association or society providing services to its members, club, association, society providing services to its members, whether there is supply of service. Must be recalling that government has introduced White Finance Act 2021 Section 7, subsection 1, clause AA. That too with retrospectively from July 1, 2017. And they have said it is service and club and members are two separate persons by deeming fiction explanation. They're saying they're separate person. There is supply of service by club to its members and GST leviable. Contrary to the subtle jurisprudence by Honorable Supreme Court in the case of Calcutta Club Limited in the pre-GST regime. Now, Kerala High Court, the first one, the leading one, in the case of Indian Medical Association has held that section 2 subsection 17 subclause E read with section 7 subsection 1 clause AA, which is retrospectively inserted by Finance Act 2021 is ultra vires, beyond the constitutional power as per Article 246A, which paved the way for the GST introduction in the country. Article 265 to the Constitution of India and Article 366(12)A. What is GST? They have said it is beyond. Second, they have said that the one doctrine of principle of mutuality. You must be recalling Calcutta Club judgment of Honorable Apex Court, principle of mutuality. One cannot provide to the service to himself. So left hand to the right hand, not possible. Both are same person. And for service, there has to be plurality. There should be supplier and there should be recipient. And Honorable Kerala High Court has relied upon doctrine of principle of mutuality, and they have said this doctrine has survived even 46th Amendment to the Constitution of India, deemed sale concept in 1982. So principle of mutuality, that you cannot provide the service to himself, has survived. This concept got survived even after 46th Amendment to the Constitution of India, deemed sale. And that is the Calcutta Club judgment, no service tax leviable. They have relied on this doctrine and said no GST can be levied on supply of services by club to its members. On retrospective applicability, what Honorable Kerala High Court has said, any law which you're inserting in 2021, that too by deeming fiction, it is again against rule of fairness. Of course, quite obvious. If you're introducing from July 1, 2017, and that is too by Finance Act 2021, quite obvious club may not have charged GST. It is going against the rule of fairness, and retrospective law cannot be levied like this. This is what Kerala High Court judgment. And they say for supply of service, there has to be plurality, right? Two different person. Come back to the cross charge. I'm giving food for thought. You start thinking now, and I need your concurrence also. This is what I'm thinking. Now, this matter is boiling, and I'm sure it will go to Supreme Court, but start discussing. In pre-GST era, when we were stock transferring the goods, so company stock transferring from one branch to another branch, there was no VAT, no CST. Some of the state, we are restricting input tax credit, and certain percentage need to be reversed of ITC. This was the provision, right? There was no chargeability of VAT and CST because you can't sell to yourself. In service, Calcutta Club judgment, principle of mutuality, now come back to GST. Even this principle of mutuality has been relied upon by Kerala High Court while determining whether any service is there from club to its members. They have said there is no service. Now coming back to cross charge. Now I'm looking for the answer from each one of you. What happened in cross charge? Corporate office giving service to the branch. Is it not against principle of mutuality? You can't give service to yourself. There has to be plurality. Done away with the valuation part. If recipient is entitled for full ITC, of course, second proviso to Rule 28, Sub-Rule 1 is saying any value can be picked up by the supplier and that would be deemed open market value, right? But those who are into exempted sector like education, like healthcare, is a cost. So I'm thinking this cross charge would be new, pointer for all of us together. And relying on Kerala High Court, we can also litigate this subject matter that cross charge is beyond. And that is what my take on the matter. What do you think? Maybe we have two versions, two school, but that is what I'm seeing Kerala High Court with respect to cross charge. And I have given my humble submission. Of course, Honorable Apex Court will decide the subject matter, but principle of mutuality was a settled one, which they have unsettled, which department has unsettled. And they have created deeming fiction when services from club to its members was discussed with retrospective applicability. So what is your take, by the way? You can write it in the question answers tab, but that is my observation. Hope this third jurisprudence is clear to all. Can I see thumbs up from each one of you? Please, thumbs up from each one of you that this matter is very clear to all of you. So a thumbs up will really give, feel of it that you are really aligned with me and you're understanding what I'm communicating to each one of you. So nice of you. Thank you very much. A lot of thumbs up has come. So thank you. Thank you very much. Thank you. Okay. Coming back to the next important. Let me start with the example so that I can get answer from you. Let's say I'm a company registered in Haryana. Let's say Gurgaon, registered in Haryana, Gurgaon. I'm importing certain goods at Nhava Sheva, Mumbai. So now in Maharashtra, I'm having no registration. I filed my bill of entry under IEC code having registration details of my Haryana. Instead of receiving goods in my Haryana principal place of business or additional place of business in Haryana, instead of bringing the goods from Nhava Sheva to my place, I'm directly sending to Calcutta to my customer. I'm directly sending from Nhava Sheva to Calcutta to my customer. Physically, I have not received the goods in Haryana location. My question goes to all of you. Can I avail GST input tax credit because I have not physically received the goods? From Nhava Sheva, I have directly dispatched to Calcutta, customer location. Tell me, can I avail credit? Please tell me yes and no in question answers tab. I'm not expecting much. Can I avail the credit? My answer is GST law has done away the concept of physical receipt of goods, which was there in pre-GST era. If you look at section 10, subsection 1, clause B of IGST Act, Bill to SIP2 model, Bill to SIP2 model. What is Bill to SIP2 model? That under instruction of middle party, the goods are being delivered to the customer. And it is deemed received from the supplier, right? And this is being included within the four corners of the provision, GST law provision. I'm expecting from you, can you write under which provision this is called deemed receipt of goods? Under which provision? Please tell me. If you know it, write down in a question answers tab or suggest me, because ultimately this matter has gone before Patna High Court and this matter was debated. And Honorable Patna High Court in the case of Sane Retails Private Limited has given judgment that there's a concept called deemed receipt, physical receipt need not required. With a specific provision, explanation under section 16 subsection 2 clause B. What is clause B? Receipt of goods or services. There's a concept called deemed receipt of goods. Now, again, I'm telling you, you read this explanation, which got ended from 1st of February 2019. Even there's the concept of deemed receipt of services. Deemed receipt of services. And for understanding this, let me draw one example for you. Let's say I'm a person who is providing services, and you are my client and customer. You are in Tamil Nadu, I'm in Delhi. Now you instructed me, Bimalji, you go to Calcutta and serve to this client in Calcutta. At your instruction, who is Tamil Nadu registered, instructing Bimal Jain, supplier of service in Delhi, and he's giving services to the customer at West Bengal. So you're not receiving anything. Tamil Nadu is not receiving anything. Is it deemed receipt of services? And believe me, this explanation had amended from 1st February 2019, and they are saying it is called deemed receipt of services for you. You can avail credit. And that is what the interesting aspect, even for the services, this concept is applicable. Hope this third litigation is again clear to all of you. If it's clear, I need one thumbs up once again from you to understand. This thumbs up is only to understand that you are getting those judgment which I'm referring to. This thumbs up is only to justify, yes, that you are getting all the pointers which I'm deliberating in this webinar. Perfect. Coming to the next important aspect. We are finding a lot many judgment. An Honorable High Court is saying when there is alternate remedy, filing appeal, you can't come to the High Court and you can't file the writ petition under Article 226 or 227 to the Constitution of India. And they are not accepting and they are dismissing the writ petition because there is alternate remedy. So I'm starting one important case which we have argued and we have discussed. I'm giving you the practical scenario, what happened in that case, so that you can understand what is happening in Pen India. In one of the case, let's say you came up to me, you are a taxpayer, you came up to me, I'm a consultant, advocate, and you have shown me one notice. Notice is saying why your registration should not be cancelled because you took your registration by means of fraud. Section 29, subsection 2, clause E. And this notice was dated 16th May 2023. So you got a notice from the department and notice is saying you took registration by means of fraud. Notice dated is 16th May 2023. When you came to me, I asked two questions to you. The first question I asked, when you got registration done, you said 3rd February 2018. Then I asked second question, are you filing all your GST return? You promptly answered, yes, sir, I'm filing all my GST return. Then I asked why department is alleging. They're saying you took registration by means of fraud. You said, sir, I do not know what happened. So this client is before me and asking me, Bimalji, what should I do? So I'm asking you, a lot of, tax professional keep watching my webinar, my seminar, my presentation. I'm asking you what you will do. Maybe you will reply to the relevant department. You'd be making, while drafting reply, there are a lot of, features available today. There's a Google, there's ChatGPT. You can draft any reply and you can quote as many judgment as you want without putting your efforts. But what I said to my client, the client who came up to me, I said, boss, what you want? You want long services or short services? Short is what? Simply drafting the reply, which anyone can do that. But he said to me, Bimalji, I have come to you all the way. I want to have complete solution. So I told him very clearly, see what happened, whatever reply you will submit, they are going to cancel your registration. Is it happening? Please tell me, all India happening. And that too, they will cancel your registration with retrospective date. And then what they will do, what department will do after cancelling registration with retrospective date, they will go to your buyer, all buyer, and will say, this ITC is not available. And why this ITC is not available? Because your supplier registration got cancelled, that too with retrospective date. So your ITC is a fake ITC. Am I right? Please tell me, am I right? This is what I have seen pan-India. Am I right? If I'm right, I can see thumbs up from you. This is happening pan-India. This is happening pan-India, believe me. And all the buyers now into litigation, and just for no reason. And all the buyer will come to you, to supplier, and they will say, Bimalji, being supplier, you also did like this thing. But there's no fault of supplier, let me tell you. I told my client very clearly that your registration going to be cancelled with retrospective date. Believe me, I sent 1-page reply of that notice which I got. Just 1-page reply. And in that reply, I quoted only 2 para. 1 para, please let me know the reason and basis why you are making such allegation, such a severe allegation that I took registration by means of fraud. Tell me the reason and basis. Allegation simply will not work. Tell me the reason and basis so that I can defend myself first. Second, sir, before taking any action, give me opportunity of being heard. I wrote to them, but quite obvious, department as usual. On 29th May, my reply was submitted on 23rd May, and department on 29th May 2023 cancelled my registration, and that too with retrospective date 3rd February 2018. Now, having option to file revocation application, alternate remedy, having option to file revocation application under section 30, having option to file appeal under section 107, I did not do anything. I filed a writ petition in Delhi High Court. I filed the writ petition in Delhi High Court. When this matter was coming up before Delhi High Court, Honorable Bench asked me what is the subject matter. I said to the Honorable Bench, Lordship, department has issued so-called notice to me and they are alleging I took registration by means of fraud. Lordship, I responded back. I said, let me know the reason and basis so that I can defend myself. And I also requested for the personal hearing, Lordship, but they have not given any reason or basis. They have not given any PH, and they have cancelled my registration, that too with retrospective date. When Lordship asked department fellow, Dia, what is your take on the matter? Department fellow was smart enough, and he said, Lordship, allow me to file counter. I could understand that he is trying to buy the time. I said to the Honorable Bench, Lordship, when I responded back, I said, let me know the reason and basis. I said, give me PH. They are not giving me time. And now he needs time to file counter. Lordship, they could have seen the proviso under section 29, subsection 2, clause E, and proviso clearly saying that for registration cancel, they must give you PH. You take down one section, 75, subsection 4. Please take down important section. If any adverse order passed against you, department must give you the PH notice, must give you opportunity of being heard. If they're not giving this opportunity of being heard, then there is complete violation of principle of natural justice. Let me tell you the 4 situations, 4 circumstances, and you must keep to your mind. Even though alternate remedy is available, but still you can go to High Court and file a writ petition. You have to make sure these 4 situations existing. Situation number 1, when there is violation of any fundamental right. Second, when you're challenging question of law, bias of law. Third, excessive jurisdiction. And fourth, when there is violation of principle of natural justice. Was there any violation of principle of natural justice? What is your answer? Please tell me, what is your answer? Was there any violation? There was violation. He did not give me PH. Even his so-called notice was vague, with no region, with no basis. What should I defend? Nothing. And believe me, I got favorable judgment. That so-called notice and registration cancel got vacated. And fortunate part, department has levied 5,000 penalty on revenue to be paid to Bimal Jain for this legal hassles. Of course, 5,000 rupees is not a big amount, but getting this kind of penalty levied on revenue for unwanted region, unease of business is one of the exemplary order which we got for the favor of a client. And that is how I'm dealing with. Even though alternate remedy exists, it is not a bar. You can see the fourth situation and file the writ petition. So this was my fourth point of litigation. Hope I'm clear. If I'm clear, you got it. Can I see thumbs up once again? A thumbs up, good thumbs up from each one of you, so that at least we are going, and 2-3 more cases, and then your question, whatever you have posted in question answers tab, I will pick up. Thank you very much. Lot of thumbs up has come this time, so you're active. Take a cup of tea or coffee. Be actively participating. Maximum 10-15 minutes. Done. Definitely the interesting part, question answers, open house. So just 10-15 minutes for more important judgment. Now coming back to the next point. Whenever we get so-called notice, there are two important things. Department must give me time to file reply, and then they must give me time for the personal hearing. Am I right? Let me ask first question. What is the time limit in GST law? Have you seen any time limit in GST law for submission of reply to so-called notice? Please tell me. Have you seen any provision in GST law for submission of reply? What is the timeline? Any timeline? You tell me, what is the timeline? I've seen number of cases they send so-called notice, and within a week they expect that we should submit the reply. In one of the case from MP High Courts, Remans India Limited, so-called notice was 12th of September, and they wanted petitioner to submit reply by 19th of September, within 7 days. And they have passed ex parte order also, and matter has gone before MP High Court in the case of Remans India Limited. But what is the timeline? Under which provision? Take down 73 subsection 8 and corresponding provision under section 74. The time period prescribed 30 days. 30 days. Because it is clearly written, if you pay the tax and interest within 30 days of the issuance of so-called notice, then no penalty, and all proceedings shall be deemed concluded. When you look at non-fraud cases, 30 days. If you look at 74 capital A, which is new provision effective from financial year 24-25, then this 30 days is extended to 60 days. This is what the provision. Minimum 30 days time period, they must give it to you. Second point. Is it possible that they can give you PH a date prior to the date of submission of reply? So PH date is prior, and then then the reply date. I'm asking you, is it possible? What we have seen, reply must be submitted, then a PH notice must be given so that it can be considered. How come a PH notice is prior to the date of submission of reply to so-called notice? How come? To my mind, it is not doable, not possible. And matter has gone in one of the cases in Patna High Court, SP Singla Construction Private Limited, wherein the date of hearing was prior to the date of submission of reply, and this was stated to be contrary when you look at provision 73 subsection 8 of CGST Act. So I do not know. Pan India, we are saying GST is one nation, one tax, one market, common law, but I do not know. It is differently interpreted by different different state authority, sometimes central authority, and lot of litigation for unwanted region. taxpayer is looking for ease of business. And it should not be creating unease of business for all of us. Otherwise, the purpose and the message of GST law will get diluted. This was my next jurisprudence case. Next, coming back to the last point of the day, then I will take up one or two more and then I will sum up. When you're filing appeal before first appellate authority, and listen very carefully, very interesting one, which is with respect to recent changes Finance Act 2025, which is yet to be notified, interesting and important one. Listen very carefully. I know that a little longer sometimes takes away your time, but important one. Are you all there with me? Shall I start with this point? If I start, can I see one more thumbs up? That still you're sticking with me and you're enjoying this webinar and you want to listen this part as well. Okay. So all like lot of thumbs up, lot of clapping for me. Thank you very much. This clapping goes to all of you who are still sticking and listening to me. Listen very carefully. When we have to file appeal before first appellate authority under section 107, what is the amount to be deposited compulsorily as a pre-deposit? It is first you pay admitted tax liability, interest, penalty, any fine, admitted one. And then 10% of disputed tax. Am I right? 10% of disputed tax. Earlier limit was, the threshold was 50 crore, which got reduced to 40 crore from 1st November 2024. So this is the provision before first appellate authority. What about second appellate, GST 80, which is yet to be formed? Now GST 80 rules are being notified. We are all hopeful that this July 1, 2025, we can see light of the day. We can heard that which date GST 80 going to be formed and would be operational. Lot of things are happening around. But when you are going to second appellate authority, which is GST 80, what is the amount of pre-deposit? 20% of disputed tax, subject to maximum of 100 crore, which got reduced to 10% of disputed tax, subject to maximum of 40 crore. And these changes are made effective from 1st of November 2024. Now, this year budget, what they have done. Listen, that is the reason I said I want to discuss one change with this budget, which is yet to be notified. Now, what if they have done? There was one proviso under section 107 subsection 6, and proviso was, if there is any violation of eBay bill under section 129 subsection 3 and there's a penalty order and you want to file appeal, then you need to make payment of 25% pre-deposit. This was the proviso. Now this year budget, they have reduced 25% to 10%, but this is not a good news. They're saying now this 10% of disputed penalty order is applicable for all penalty order, irrespective of penalty order under section 129. So you have seen you get a lot of penalty order under section 122, right? When something which is being levied on a company, they are also levying penalty on employee concerned. You have seen that, right? So 10% of disputed penalty need to be deposited for filing appeal before first appellate authority. I'm recalling one good judgment of Bombay High Court. In that case, what happened? Department has issued notice, so-called notice to the employee who is a taxation manager, and penalty levied in that so-called notice was 3,731 crore rupees. I'm repeating again so that you can listen carefully. That penalty so-called notice was for 3,731 crore rupees. Department was saying that company has availed wrong ITC, and this taxation manager was in connivance with the company. So he got benefited and benefited to the tune of 3,731 crore rupees. So he must pay penalty to the department. Look at, you will start laughing, right? That is what it is. Is it really good in simple tax? To my mind, no way. It is not good in simple tax. It's complicating. And that too, when you're changing the law, you're saying 10% pre-deposit. See, for disputed tax, there is a threshold, 40 crore, right? Subject to maximum of 40 crore. But this change is having no upper limit. No upper limit. Second, disputed tax pre-deposit can be made through e-credit ledger. And very recently, Gujarat High Court judgment, Yasodha Industries Limited, which is upheld by Honorable Supreme Court, that the pre-deposit can be made through e-credit ledger, is a laudable one. So this dispute whether we can pay pre-deposit through e-credit ledger, permissible. It is being now settled. Gujarat High Court judgment accepted by Supreme Court. So quite obvious, no problem. But penalty pre-deposit, 10% with no upper limit, can it be paid through e-credit ledger? It can't be. So penalty pre-deposit must go in cash. So look at the position of this employee concerned who got notice of 3,731 crore rupees. So 307 crore he needs to make payment because there's no upper limit, and that too in cash. Look at the irony. What will happen to the country? I said you have to wait and listen to me carefully. And that is the reason I said this is happening with recent Finance Act 2025. And this provision is yet to be notified. Fortunate part. But let me tell you what happened in this Bombay High Court judgment. Bombay High Court judgment has said the penalty which was levied under Section 122 subsection 1A is to be read with respect to taxable person, because the offense is specified under Section 122(1)(a), each having the reference of Section 122 subsection 1 and 4 specified offenses: supply of goods or services without invoice, issuance of invoice without supply of goods or services, credit taken on such invoices or utilized such credit, wrongly availed credit, and ISD related credit is non-compliant. So 4 offenses, but all these 4 offenses with respect to offenses prescribed under Section 122 subsection 1 with respect to taxable person. Who is a taxable person? Under Section 2 subsection 107, who is registered or liable to be registered. And this was argued before Bombay High Court, and Honorable Bombay High Court has said employee concerned is neither registered in GST nor liable to be registered. Thereby, no penalty can be levied under Section 122 subsection 1A. Bombay High Court. But recently I heard Delhi High Court has said that 122 subsection 1A penalty can be levied on any person. So where we are heading for? It is not each of business, believe me. But Bombay High Court judgment, favorable judgment, department did not stop. They have gone and filed SLP before Supreme Court, and Supreme Court has dismissed. They did not find any cognizant reason to interfere. So Honorable Supreme Court dismissed the SLP filed by the Revenue against Bombay High Court judgment, a relief to us. But I'm only saying, is it really ease of business? It is not ease of business. It's complicating throughout. Let me take the last subject matter of the day. Whenever department comes for inspection and search, they find, valuable asset, bullion, currency, jewelry. Under GST, I'm referring to. Now, only question which we are discussing, can they seize any cash at the time of search or inspection done by the GST department with a proper officer, is competent one to seize the cash, even though unaccounted. Believe me, in case of Dheeraj Khandilwal, by Honorable Delhi High Court has said that proper officer under Section 67 subsection 2 is not empowered to seize any valuable asset, bullion, jewelry, currency. What they can seize? goods, documents, books, and things. As per section 67, subsection 2. That is what the provision. They can't seize. If they find anything unaccounted, let income tax department deal with it. This is not the inventory. This is not falling within the definition of goods. This is not falling within the definition of document, books, and even things. So this Deepak Khandelwal judgment, by Delhi High Court, they have said that the proper officer cannot do that. But department did not stop. They filed SLP in the Supreme Court. But Honorable Apex Court has dismissed the SLP filed by the Supreme Court. So subtle jurisprudence, they can't do that. So fortunate, and it is coming to our favor, and that is what I can say. So I picked up many 8-9 different judgment of litigation. But only thing which is coming to my mind, who is litigating? Of course, there are few percentage of taxpayer who are not following the law, but maximum percentage, I can say 99% of taxpayer are tax compliant. They do not want any kind of litigation. Do you all agree? Say yes or no. Maybe it's a poll. You can say yes and no, or you can say thumbs up, be fully compliant. We want that there should be ease of business. That's what we all are trying. But why these complications? Who is creating complication? At whose behest? And whatever we are discussing today, and whatever litigation point I have discussed for 1 hour, 15 minutes plus, who is creating complication for all of us? Department has to look into. And just look at the proviso which has recently got inserted under section 107, subsection 6, 10% of pre-deposit for the penalty order with no upper limit. Is it ease of business? You're putting upper limit when you're talking about disputed tax. But when you're talking about penalty order, there's no upper limit which is to be paid through e-cash ledger. I do not know. But all the so-called notices come with penalty under section 122. They also levy penalty, personal penalty on employee concern or any person who they believe they are in connivance. So to my mind, this litigation within the 7-8 years of GST, we have seen so much. A lot of litigation pending before GST 80, which is yet to be formed. And there also manual order versus online order. Manual order online cannot be filed. Lot of challenges, practical problem. Online order sometime available. Sometimes they are giving detailed order to me, but summary order is being uploaded. After a gap of 20 days, 30 days, lot of things are happening. Why only taxpayer? Taxpayers should be understood. They are really adding up to the nation growth and development. Of course, non-compliant taxpayer must be taken on task. Those who are tax evader, they must be taught a good lesson, exemplary lesson. But those who are following the law, 98%, 99%, they should not face the music. They should not face this, burning. They should not face this fire just because there are 1% and 2% who are non-compliant. That is my humble conclusion of today's GST litigation. Lot of things are there. Of course, your suggestion, if you want any topic which I should pick up in my next webinar, you can always write down. Of course, this webinar is recorded. You will get through your email also. You can watch later also. But I'm thanking each one of you. And today we are starting. Normally, I've seen hers was there next to me. Today, Gina is there for introduction part and the question answer session. So she has started well. And today I'm thanking each one of you who have joined and participating throughout. Thanking each one of you. Before I say that, Gina, you start, but let me tell you on 29th of May, I'm coming at Rajkot. So Cynthia is also coming from Zoho Books. So we are going to have open session, GST or anything which you want, followed by a dinner. It's kind of free program, and details will be provided through registration detail in a chat box which you can take down and register. If you happen to be nearby in Gujarat, Rajkot region, so let's join together and we will have really good discussion, one-on-one, personal. I would be there. So it would be my delight to interact and reply to all your queries, whether related to GST or non-related to GST. With this, I'm summing up, handing over to Gina.
Thank you so much, sir. I really hope everyone, understood the session, and sir very patiently also kept asking each one of y'all to put your thumbs up just to see whether y'all are active. So thank you so much for that, sir, and thank you to each participant as well. We really love these sessions with Bimal sir, and they are one of the most interactive sessions. So we also have GST Chronicles, which is happening in Rajkot, as already mentioned. I've broadcasted the link over here, so you can always register. We have a free dinner and networking dinner. So at that point of time, also in case if after the session, sir tends to go on like till like 10 o'clock also sometimes with the sessions and patiently answering each and every question. So please feel free to come over there. And yeah, it's happening on the 29th. Thank you so much. And right now we are going to start taking in questions. So in case if you have published a question earlier, it'd be great if you can push it again over here towards the end. In the meanwhile, I've already started taking questions. Yeah. So the Yeah. So the first question is what is double? What is about double ITC? What does it mean? And does it mean like it's taken by two taxpayers?
Reading from where, Gina? Your top or bottom?
Yeah, from the top.
From the top? Just a
Yeah.
minute. Let me also go there. Okay. It means ITC taken by two taxpayer. Now, my answer is, I've said double in the context of supplier has paid the taxes. But if you deny the credit to the recipient, then that is amount as a double taxation on same transaction. That was the context I given that double taxation. Now, what is about double ITC means ITC taken by two taxpayer? No, I didn't say double ITC. I said that supplier has paid the taxes. You're denying the credit to the buyer. It amount to double payment. So that is what the double taxation I refer to. There is no double ITC which I referred. So I have clarified what I said. Next.
Yeah. The next question is what is IMS?
Invoice management system is a very interesting system whereby, in simple words, we have done program for Zoho Books also. That video is available, which you can watch. Under invoice management system, the supplier, whatever he's raising the invoice, that would be visible to you on IMS portal, IMS dashboard. Recipient. What recipient need to do once I have filed my GSTR1 being supplier, it is available to my recipient, all the invoices available to my recipient, which they can see on IMS dashboard. What you would be doing as a recipient, you would be either accepting, rejecting, pending, or no action. No action means deemed accepted. Now let's take an example for better clarity. Let's say I've raised one invoice to you. If this invoice belongs to you and I filed my GSTR1, you can see this invoice is coming on IMS dashboard. So what you would be doing, you'd be accepting the same because it is your invoice. So once you accept this invoice, it will flow to your GSTR2B as an eligible credit. And then from your 2B, it will go to GSTR3B for the recipient. And what will happen for supplier? It is shown in GSTR1. Once you accept the same, it will be auto-populated in my GSTR3B as a liability. So as a supplier, I have to make payment compulsorily, which is moving from GSTR1 to GSTR3B, and there should not be mismatch. And your credit is auto-populated in 2B, then getting in 3B. So you are 100% sure the invoice on which you are availing credit, that your supplier has made the payment, and which was a disputed one under section 16 subsection 2 clause C. So IMS is a different topic altogether, but I've given you flavor. What is IMS? How it is helping to done away a lot of litigation point when we talk about recipient credit. Next.
Yeah. The next one is, sir, for the financial year 2021-2022, the PO had issued personal hearing 3 times, given 3 to 4 days intervals in April 2025. The taxpayer unable to reply nor appeared for the PH. Order passed stating reply not filed and created demand of tax, interest and penalty. Can we apply for rectification of the order?
My simple answer is that rectification under section 161. Rectification under section 161 is permissible when there is any apparent mistake or error on the face of the order. But this order, impugn order, is being passed because neither you replied nor you have attended the PH. To my mind, you will not get any relief under rectification. But of course, you may try alternative ways if you can create justifiable reason that why you could not reply or why you could not attend. Even the 3-4 PH notice given only for the few days gap is not permissible. If you go to this master circular of CBIC, circular number 93 dated 10th March 2017, there is specific provision that there should be sufficient interval of time, and by separate communication they must give you the PH notice. So maybe you can pick up those arguments and then say that I was not given PH properly. It was with the shortest time period, which is going against the master circular. So you can see the alternative ways. So relief can be sought only from the High Court, otherwise first appellate authority.
All right. The next question is, so whether the place of supply and location of the recipient should be within the same state so as to avail ITC, specifically when it comes to deemed receipt of services in cases where place of supply of services is linked to the location where services are performed.
See, this question is again an interesting one, and we require to really understand the practical example. Yes, I understand in what context you're posting this query to me. If services are linked to location of immovable property, then maybe a question in your mind. But I'm of the opinion in that case also, you should invoice to the person, and then ultimately wherever property located and customers located, the GST component will travel to that particular state on the concept of GST being destination-based consumption tax. So this is detailed concept need to be understood, but deemed receipt of services in the context, this context is coming from the perspective if supplier is serving to someone else at the instruction of registered person, then that is also called deemed receipt of services. And there may be different contexts which we need to understand one by one when we look at place of supply, provision under section 12 for domestic transaction, under section 13 when we look at international transaction of IGST Act. So we need to analyze those situations one by one, and then we can understand. But context is very clear. Deemed receipt of services is being understood in the GST law.
The next question is, please suggest some points of projection of amnesty application for financial year 17-18 and 18-19 on the grounds of supplier has late filed their return in financial year 2022 and 2023. So you as a buyer have to pay interest for delayed filing return by supplier, and the case is not fitted for amnesty benefit under section 128A.
I can simply say, see, look at from buyer perspective, it's a fault of supplier. Section 73 is being covered when we look at Section 128 capital A, no denial. But even though second proviso under Section 128 capital A, subsection 1 is talking about any notice issued under Section 74, but that is being remanded back by appellate authority, appellate tribunal or court, stating that this is not a fraud case, then those cases can be considered under Section 128 capital A. So you need to look at those options which you can plead before the court and get the relief accordingly. But to my mind, of course, you can try out. And it is again subject to litigation. But to my mind, of course, looking at your factual position, whatever you have posted in your question, it is doable one.
The next one is, do we have a right to get intelligence report copy based on which show cause notice is issued?
No, you can't get, but this copy is available in the file and folder of Revenue Department, because reason to believe they need to justify, but they are not supposed to disclose to you where from they have created intelligence report. So this is not being given, but of course, if court wants, it can be cross-checked and verified. Of course, that should be the basis of any kind of inspection, search, seizure, any kind of initiative taken by the department. So this report is internal, not the external, but need to be there in the file for initiating any proceedings.
The next one is, despite of retrospective amendment to under section 17.5 against SC decision in Safari case, why is the department filed SLP which got rejected on 20th May 2025?
It has got nothing to do, please, it's very clear with the retrospective amendment under section 17 subsection 5 clause D. Earlier it was plant or machinery, now it is to be read as a plant and machinery. So to my mind, it's similar definition as we have read for 17.5C and D going to be applicable. So whatever this review petition got dismissed, it is with respect to the provision as was existing prior to retrospective amendment. So it has got nothing to do and it's of no use. It is only for academic purpose.
The next question is, tax paid before issued under section 74, order issued for interest and penalty, appeal filed, appellate authority agreed to assess under section 73 instead of 74. We are ready to pay the interest, but appellate authority is asking for penalty, that is 10%. According to us, no penalty should be levied. Please share your views.
No, this is the point, like, if you have paid tax and interest both together, then you could have said no penalty, because provision under section 73 subsection 8, if you read it, they're saying if tax and interest both are being paid together. Now interest was not paid, that is the reason 10% penalty is coming into the picture. So since interest is not being paid, there is litigation, and to that extent you are not having relief as per me as well.
All right. The next question will be, Section 73, subsection 9 states that a penalty equivalent to 10% of the tax, 10,000 rupees, whichever is higher, needs to be paid. Does that mean that the minimum penalty of 10% of tax or 10,000, whichever is higher, needs to be paid if the tax payment is not made within 30 days? And the section 73, subsection 8, which states no penalty is payable, is redundant?
Its simple meaning is that if you pay within 30 days of so-called notice, tax and interest, then no penalty. If it is not being paid within 30 days of issuance of so-called notice, then of course penalty will come into the picture, which would be higher of to 20,000 rupees, 10,000 CGST, 10,000 SGST, or 10% of tax amount. That is what the provision all about. So if you are paid within 30 days, then no penalty. And 73 subsection 8 very clear that all the proceedings under the so-called notice shall be deemed concluded.
The next question is, sir, what about Mineral Area Development Authority versus Steel Authority of India case? Notices are being sent to brickfield manufacturers under Section 74 for recovering GST on royalty and ordering against SSE. Even SSE had paid their tax amount before issuing order. SSEs filed their appeal and the Commissioner of Appeal is giving no benefit to the SSE.
Why they are not giving benefit to the SSE? I do not understand. See, of course, I understand royalty, GST on royalty is the dispute is subject matter. Royalty is being said it's not a tax as per, Honorable Supreme Court recent judgment, India Cement, that royalty is not a tax, is a state subject matter. Now, having said that, what is boiling and burning, whether GST to be levied on royalty, this is what being debated and discussed pan-India. When royalty is not a tax, then tax on tax argument is being done away with. So question comes whether royalty is really chargeable to GST and a reverse charge. But in your example, in your question which you have posted here, you're saying that for recovering GST on royalty and ordering against SSC, even SSC has paid the tax amount before issuing order. So if you have paid the tax amount, why they are creating complication? I need to read the factual position, then only I can opine. But when you have paid the taxes, this would not create any hassle for that. So maybe factual will support for drawing more light on the subject matter, and then I can opine what should be a real right way to handle this subject matter.
All right. Then we'll take how many more questions, sir? Do you have time for?
Maybe how many you got? You got lot many now. Maybe you can take 2-3 more, and then we can sum up.
Okay, fine. So we have 3 more questions that we'll take up. The first one, yeah. Namaskaram, sir. It is in respect to the taxability under GST for the excess ITC compared to GST R2A, whether it would be right to say as under, the difference should not be basis for assessment under Section 73 or 74 as it talks about financial year, and the month-on-month difference in particular year should only be for monitoring purposes when those months are for the purpose of blocking filing of relevant statements or returns. That's the first part of the question.
Yes, he's right to a certain extent because it's recurring in nature. But only thing which taxpayer need to cross-check that if he's compiling the data, yearly data, of course, with respect to annual return, which I have said, subject to 16 subsection 4 time limit conditions. If it is overall matching, then no problem. Respective month-wise difference may be there for either or region. So that should not be the basis. And it is only for the past period GSTR 2A until 31st December 2021. But after that, GSTR 2B is applicable from 1st January 2022. So to my mind, for the past period, it is cumulative, not for the relevant month-wise we have to look at.
The second part of that same question says, the Compensation Cess Act nowhere mentions month-on-month compensation.
Yes, that is what I agree with him. Because it should be cumulatively we have to check and we have to reconcile accordingly.
Okay. The next question is, despite of retrospect amendments to sections...
This we have done, Safari.
Okay. Sorry. The next one is, even SEN or order hosted by department, but no email communications are received by few taxpayers. Hence, miss the deadline to file appeal or file a reply. What is the remedy, sir?
Very critical. Now, a lot of things are happening. You haven't received through email, but it is uploaded on a portal. Have you checked on a portal? Because this is one of the mode of service under Section 169. Even some of the High Court are saying if it is uploaded on a portal and you have not seen that, then it's your mistake. So maybe you can put your point across. You can plead bona fide, and if you can prove there was a reasonable region, that is the region you could not communicate, maybe you will get the relief. But you are getting contrary judgment, and you will agree with me, you need to justify your positioning in terms of realistic scenario. Sometime email not received but uploaded on a portal, even you have not seen on portal whose fault it was, why it was missed. Reasoning, proper reasoning must be required to be given, then only you can get the relief.
All right. I think we'll take this as a last question, sir.
Yeah.
Yeah. So the compensation says Act nowhere mentions month-on-month compensation, but only speaks about the financial year, meaning thereby
That is in continuation of the question which you were asking me
it's in
prior
two
to.
parts.
Yes.
Yeah.
Which you handle. You can take the next question.
All right. Okay. If the supplier records an incorrect GSTN and the recipient associated with that incorrect GSTN claims the input tax credit, what happens to the IDC after the supplier amends the GSTN to the correct one? Would this not result in double availment of IDC? Is there any mechanism for enhancing the liability against the originally reported incorrect GSTN?
So if you have taken ITC when it was incorrect GSTN was uploaded, furnished by the supplier, it was not coming in your 2A and you have taken the credit. Now, when it was corrected, it is again credited to your e-credit ledger. So you should not avail doubly. That is what the subject matter. So subsequently, when it is getting e-credit ledger credited, you should debit the same immediately and intimate to the authority that this credit you have taken before, so which is now getting credited to my e-credit ledger, which I'm debiting now, which is already availed on so and so date. That is how you can manage and report bona fidely suo moto from your side to prove that you are tax compliant and you have done the part which is required to be done.
Right. Okay, fine. So that brings us to the end of the session. And thank you so much. Thank you each and every one of y'all. Y'all will be able to see a uploaded video on YouTube soon. And yeah, see you on the 29th of May at Rajkot. Once again, that's a gentle reminder. I will quickly put that as well over here, the registration link on the chat once again, just so that in case you happen to miss it earlier, I will put it again on. Yeah, I think you should be able to view it right now. So thank you, and please keep showing us your love on these webinars, and it means a lot. Thank you once again, and thank you so much, sir.
Just 1 minute I will take before we say goodbye to all the viewers pan India. We all are trying our best. Zoho Books is taking this initiative for organizing webinar month-on-month basis on different topic. In case you feel like some topic is very important, you can always write back to us. We are here to make GST law good and simple tax. We are trying our best. And of course, with this coffee with Bimal, Jain, and Kipin was supposed to come. Now Cynthia will be joining at Rajkot. You all are most welcome in Gujarat, followed by dinner. And we're going to have a lot of discussion on GST. And I said, it is not GST. Anything which you want to discuss with me, I would be available. So pleasure to receive. If you're around Gujarat or away from Gujarat, you're invited, mostly invited. So welcome. With this next webinar, any topic which you think we should take up, if you're giving suggestion, we will consider and take up the next webinar on that subject matter, which is at most required by the viewers. With this, thanking each one of you. Thank you very much.
Thank you. Thank you so much, sir.
Thank you. Bye-bye.
Bye-bye.